Assalamu alaikum everyone. How are you guys? So we are back with the part two on incentive plans and executive compensation. Initial part in the part one, we were actually talking about the various different types of incentives, what is pay for performance and what is the benefits and what are the issues that we actually encounter while designing incentive plans. Okay, we talked about individual plans, organizational plans. We distinguished about various different types of incentives or variable pay plans that are paid within the organization. The individual based pays, group incentives, and then organizational performance based variable incentive plans. We talked about various different types of bonuses and all these things. In the part two, what we are actually going to talk about is basically the group or team incentive plans. What are the various different incentive plans that are offered to the various different teams? So, and we shall be talking about executive compensation. What are the various different components of the executive compensation, along with what are the various different forms of sales incentive plans? What are the various different kinds of incentive or variable pays that are paid to the salespeople? What is commission? What is salary plus commission? And all these things. So let's explore about today's chapter, that is incentive plans and compensation for executives. I am Masroor Soomro, faculty for Human Resource Management, Sukkur University, and this lecture is the part of a series that is a humble effort for the students who are quarantined during the COVID-19 wave 2 in Pakistan. So let's proceed and let's think. Let's see what this part actually has to tell us, or what we can learn from this part. So moving forward, so why organizations establish variable pay plans for groups and types? What is the basic reason? What's the basic logic behind developing various different forms of incentive or variable pay plans for groups or teams? Okay, Ji, as I have told you in my first part on the incentive plans, that variable pay plan is basically a pay that is linked or related or attached with performance. Therefore, variable pay plan sometimes referred as pay for performance. So ultimately, the main reason why organizations establish variable pay plans is to improve the productivity of the organization, increase the efficiency of the employees and group members that are working, that are the part of that group or team. So the performance or the pay is attached with the performance of the team. If the team will perform, the employees will, or the group members or the team members will be paid. If the team fail to perform, then there is no pay for performance. Okay, if your performance is bad, you won't be get paid. Simple as that. Improve customer service or production quality. So you are supposed to improve the customer service. It can be after sales service, it can be before the hand service. You need to improve the production quality and anything else that is related with your job. So ultimately, what you are going to do is to increase your performance, your productivity, and you are going to improve the relationships with your customer. You are going to produce more refined production qualities products. Okay, and the fourth part is to increase the employee retention. Okay, ji. If the employees or the team members are motivated, then obviously you are going to retain them for a longer period of time. And how we are going to do it? So we have this thing. Okay, before actually designing the incentive plans for teams, we have certain issues. We, as a manager, compensation has to deal with these issues. The very first thing is how to distribute these incentives within the group members or team members, because we know in every group the tasks or duties are divided within the group members or team members, teammates. We don't know which employee or which team member has what level of the work, how difficult task he or she is performing within the group, and how much he or she should be paid from the revenue or from the portion or that the profit that or the project that they have completed together. So how much each employee or each team member or group member should be paid. So distribution of incentive is a big issue. Timing of the group and team incentives. We have to ensure when we should actually go and incentivize the student, sorry, the team members or group members. The decisions about what should be the amount that is going to be distributed among the team, what percentage of the overall profit on a specific item, since we know that these teams or groups are specified, they are designed for a specific task or duty or an assignment or a project. So obviously there are various task groups, there are assignment groups, there are project groups, and each and every team or project group has to complete a project. And before taking these projects, the team members are already promised that certain share of after completing this task you will be given. What percentage should be that amount? We have to ensure before actually engaging the members of the group or the team members of the group or team, and you have to tell them beforehand before actually starting off any project for which this group or team is actually destined to. Moving forward, distributing rewards, how you are going to distribute. So whether you are going to distribute the reward in equal same size for each member. Okay, sometimes it is up to the discretion of the management how they are going to devise the formula. The another method is different size reward for each member depending upon the difficulty of his portion or his what was his duties or her duties in that specific project. So according to the difficulty level. But the problem is again here, the problem is how you are going to determine the difficulty, the level of difficulty. What if I am working on a group project and I think what I am doing is difficult? Some people say I am recording these videos. Some people might say that recording a video is not a big deal, everybody can do it. And we certainly find such kind of behavior within our teams. Nobody bothers to appreciate the hard work that I am doing or someone else is doing. There might be some people who might think that yes, Masroor had been doing really good, great job, but nobody would agree that I should be appreciated, I should be rewarded for such an effort. Nobody knows how tough it is for me to record these videos, how much difficulty I has to go through for recording these videos. The level of difficulty for me, what is right for you, it's not possible. It's not may not be possible for me that I may say it's right for you, me as well. What is difficult for me, it may not be difficult for you. So how you are going to determine the difficulty? Therefore, how you are going to reward a group member who thinks he or she is doing a difficult job or his part in the project was difficult. So how you are going to determine the level of difficulty? That is a problem. That is a problem question. So sometimes organization says or management says they divide the reward in equal or in same size to all members. To this, some members disagree. The team member said, I was doing really hard work. I was the only person who was coming all the time. I was always present there. I was always punctually doing my work. Whenever you called me, I was there. Whereas couple of people were not present. Most of them, they were either ill or they were attending some parties or gatherings or family. annual functions or whatever the case was. So you will have many excuses how you are going to have this problem. So for this thing, we have certain solutions as well. But let's see what book has to tell you about more problems. Okay, the rewards in equal amount may be perceived as unfair, as I've already told you. But what if someone says, I did everything, I was present always, and he was or she was absent all the time? There might be problems of gender biases. There might be some problems of prejudice or discrimination. There might be some favoritism problems. So how you are going to deal with those problems when you are going to divide or distribute the reward and group or team by employees who work harder, have more capabilities, or perform more difficult jobs? How these people will have always question. They will always raise objection whenever you are going to divide the reward in equal size or equal amounts. So what you will do in that situation? Do you have any answer? You might be. You should have, since you are the compensation managers, you should be having an answer how to deal such a problem. Then another problem is the group or team members may be unwilling to handle the incentive decision for co-workers. If say for instance, I am the captain of the team and the management has tasked me or assigned me the responsibility to distribute the reward among the team members. So most of the time captains or the leaders of the group are unwilling to go for this decision. So what should we do? Okay, many employees still expect to be paid according to the individual performance. Even these people are working in groups and teams, they still think that they should be rewarded based on individual performance, not on the group performance. Then what is the need of creating teams and groups when we are supposed to deal with individual employees separately? When there is no unity, when there is no understanding, when there is no consistency, and when there is no cooperation between these teams or groups, how they are going to achieve organizational goals and objectives? Are we really destined to achieve our goals and objectives? Are we supposed to complete the project on time or in time? So, solution to these problems is simple. Before the start of any project on which this team or group is supposed to work on, these employees has to establish a formula according to which the benefit or incentive will be divided. The percentages should be defined that who will perform. You are going to divide the task as per the difficulty. I have assigned you a responsibility, and for this responsibility you will be paid this much of amount. Your responsibility is to complete that specific part, and you will be paid for that specific part. Now it's your responsibility. You will do everything. You will put all your soul into that work in order to complete that responsibility. And if you fail to achieve or complete the task, you will be called to the questions. You will be held accountable for incompletion. In that case, you will be accountable. You will be charged a certain percentage as a penalty. So before the start, you have to decide what would be the penalty and what would be the benefit. What percentage of the profit the members of the team or group are going to get after the completion of this task. Who will get how much percentage? What percentage of the overall benefit? If everybody will work hard, the expected return might be more. So the percentages are always defined that this much percentage of the whatever the profit we are going to make after completing this project. You people and the management has to tell them whatever project, whatever task they have been assigned. When the project is complete, whatever profit the company is going to make, 30% of that profit would be given to that team, and the team has to divide that 30% according to the level of difficulties before the start of that game. That's the only solution to all these problems of inequality or inequity. Moving forward, conditions when team incentives or group incentives can perform and when they cannot perform. Okay, so here the blue side says when team incentives may work if the condition is okay, if the cooperation is necessary to do the job. Okay, to do any job, organization demands team members or group members to cooperate with each other is necessary, utmost necessary. Individual performance cannot be identified. You have straight away have explained and communicated to all the group members that we don't care if any member of your team is performing or any member is not performing. We want this task to be completed by hooks or by crooks by such and such date. So we are not going to identify any individual performances. I am concerned with the group performance. Management wants the teamwork. Management is more concerned. They want teamwork. Okay, the reward system is seen as fair. The team members should see that reward system, whatever the reward, whatever the incentives are there for the group or team, are fair. They are not unfair. They are distributed fairly. Employees have inputs when these incentive plans were designed. So it's necessary. Okay, now this blue side was actually telling us that incentives will work when all these conditions are met. And when all these conditions are not met, then the group incentives will not work. When the teamwork is not necessary to do a job, individual performance is actually characterized by the culture of the organization. So we actually distinct the difference between the individual performance. Management sees little value in teamwork. Management don't think that teamwork actually works all the time. Therefore, there is no support from the management about teamwork. Therefore, there is no any kind of value for the group incentives or team incentives because management don't support it. Reward system is seen as unfair because we believe in individual. When you are actually giving us equal portion or percentage wise, then we don't care about this reward system. It may be seen as unfair. And when you were designing the incentive plan, but you didn't bother to come or go to the team members or group members and discuss with them about what kind of incentive plans we are actually designing for the group mates or teammates. Rather, we impose that incentive plan on them. That in that case, it won't work. These incentives won't work, won't perform. Okay, moving forward, organizational incentives. Now, let's talk about what are the various different types of organizational incentives. So, profit sharing or gain sharing. Okay, the profit sharing is whatever the profit organization is going to make. It will be its certain portion. Maybe, say for instance, we made a profit of 1 crore rupee, out of which I actually announced, or after making the revenue, after adjusting all the expenses, adjusting my income statement, balance sheets, and profit loss accounts, whatever profit I had, earnings before tax, retained earnings before tax, or after tax, maybe after tax. Okay. So earnings before tax or retained earnings are actually defined. The management decides, says that we are going to share our profit with our employees. The 30% of the profit will be shared. So say for instance, our retained earnings was 1 crore rupees and we are going to share 30 lakh rupees within with our employees. So whatever the strength, whatever the employee or head count of the company is, you are going to divide that specific 30 lakh rupees with that count, head count. In that way, every employee will get a certain percentage of that profit in equal amounts. Our management says that everybody will receive a bonus from the profit that we have actually gained this year. So in that way, we can share our profit. Or gain sharing most of the time used by the organization when there are teams. So teams has to share the gain, whatever the gain the organization received on a specified project. So most of the time, gain share is actually used for team group incentives or team incentives. Okay, moving here, let's talk about the primary objectives. What is the primary objective of profit sharing? Why we actually share the profit? It actually helps the organization to create a sense of ownership within the employees, sense of that we own our employees, we respect and appreciate our employees, we actually want to share our profit with our employees, and eventually this will help us increase the productivity and organizational performance as a whole. It will also help us in attracting and retaining new employees or existing employees. Okay, Ji. It will also help us improve product or service quality when our employees will be motivated, satisfied, they love when they have this sense of ownership for the company, then obviously they are going to put their heart and soul in their work, and as a result eventually this will help us improve the product and service quality, and this will also enhance the morale of employees. The the morale of the employees will be boosted because they will get a sense of ownership from the company side as well, that company actually owns them. Okay, what could be the drawbacks of profit sharing? Okay, disclosure of the information. You have to share the information about your revenues, about your profits. So sometimes it can be a problem when it comes to the government rules and regulations, taxes. You have to pay the taxes until and unless whatever you are earning is fair, it's free from all types of corruption, then in that case, you are a very nice gentleman. Your organization is a gentleman organization that actually discloses all kind of information, financial information. You are paying all your taxes, you are an abide-by citizen, and you are working as a welfare organization for your employees. So it can be a drawback if you are. So, in today's world, we have witnessed most of the organizations fear to disclose their information because even though, if I'm honest, I deal with my operations with full fairness and justice. Even though there are people who are sitting outside like hyenas, they are ready to attack on you. They are looking for a means where they can actually find something. So these hungry people are always there to attack you if you are going to disclose your financial information. So there is a problem as well. Therefore, companies are always unwilling to go or opt for this type of incentive. Variability of the profit from year to year. Obviously, every employee is not going to get a reward as he or she was rewarded last year or the year before last year. So you might get different percentages or different amount of reward or profit share. The profit results not strongly tied to employee efforts. Okay, whatever the profit the employee is receiving, he didn't made any effort for that thing. He has just received that amount. Therefore, we actually discourage such kind of sharing of incentives which are not tied to the performance or which is not tied to the employee effort. So employee should be paid for an effort so that he knows the value of that money, else that money would be wasted. Okay, the employee stock options. Now, organizations most of the time offer to their employees that they should buy their organization's own stocks, shares. Okay, yes, there are certain options that are actually given to the employees before going or opting for employee stock plans. So, what are these options? Let me tell you. First of all, okay, a plan that gives employee options, stock options. There are two types of options. But let me explain you the plan first. What is employee stock plan? So a plan that gives employee the right to purchase a fixed number of shares. Say for instance, if I am a company and I have fixed that an employee should purchase 10,000 shares a year in an annual bonus or an annual profit sharing or whatever the case is of the company at a specified price. Say for instance, my current price in the market is going at 100 rupee and I am offering my employees that they can purchase the company share at an 85 rupees at a price of 85 rupees. So we have discounted our share to our employees with 15 rupees less. So they will have to pay less 15 rupees. They will buy it at 85. However, its market price is 100 rupees. So it a specified price for a specified period of time. We actually determine that you have this much number of the shares that you can buy. If you have money, you can go and buy it for a limited period, maybe 10 days, maybe 15, maybe 1 month. So for 1 month, we shall be offering our stocks to our employees at 85 rupees. Doesn't matter whether our share is being appreciated in market or it is actually declining. So what are the two options that we actually give to our employees or officers or executives? If the market price of the stock is above the specified price, employees can purchase the stock and sell it for a profit. Okay, there are conditions that you can buy a fixed number of shares at a specified price that can be below the market price. So if the market price of the stock is above, then a specified price in option. So if I offered you at an 85 and the stock price in the market is 100 rupee, you can purchase it and keep it for a specified period, at least for 6 months. And you can sell it into the market at any selling price. So you might get this, our share might get appreciated as well. Okay, let me tell you, okay, let me complete this thing, then I will tell you another thing about the stock options I just got in my mind at the moment. So second option is if the market price of the stock is below the specified option. Okay, I am asking my employees, my market price is 85 rupees. Now in the situation or the option is inverse of the first one. Now, initially I was actually offering you to buy the stock as 85 rupees and market price was 100. But now in the second situation, second option, the situation is inverse. I am asking you to give me 100 rupees since whereas my market price of the share is what, 85 rupees. So I am asking you to pay 15 rupees more. So I am actually asking you to give me some loan. The company is in need and it needs your favors. So I am actually coming to you, you being my employee. I want you to own the company and put your all heart and soul and do your hard work and give me some money so that we can sustain now. And in future time, you can go and buy or sell our stocks at any price you want if the company is sustained and it becomes stable and it started making progress. So there are two options that are always given to the employees. Okay, moving forward, employee stock plans. Then we have another thing that is employee stock ownership plan. What's the difference between the first one and this one? This was a stock option plan. Now, stock option plan. Now I am talking about stock ownership plan, employee stock ownership plan. What's the difference between the two? A plan whereby employee gain a significant stock ownership in the organization for which they work. Now, you can go and buy a stock, and this time you will get a maximum number of shares, not a specified number of shares. And in this way, you will become the owner of that company. Stock ownership, a significant stock ownership in the organization for which you are actually working. So the big employees, those who are earning good amount from the organization, they actually tend to buy the employee stock ownership plans. So these are given to the employees, those who are at a senior level and they have been working with organizations. Okay, advantages: favorable tax treatments for employee stock ownership earnings. Okay, whatever your earning will be from the stock ownership plans, you will be given certain subsidies or rebates from the tax treatments. Then employee motivated by their ownership stake in the firm. Employees obviously will get motivated by their ownership stake in the firm. Disadvantages: retirement benefits tied to the firm's future performance. Retirement benefits, if what if I am actually going to retire, and what if the organization is also retiring, then in that situation what will be my future? My retirement benefits are tied to the future of the performance of the organization. If organization is not performing, then my future is uncertain. Okay, management tool to feed off hostile takeovers attempts. Okay, there is a problem. What if the management or other people who might take over the company, then I will be having certain problem as well. So how can I go and invest big amount in that company? So that's a question. Moving forward, the types of sales compensation plan. Now we are here for our sales force and we shall be talking about their different types of sales compensation plans. Okay, ji. Okay, this is a law that is actually applicable in California since the book is in American edition. So ignore it for a moment. We shall be talking about the second point, the salary only. Okay, there are certain employees who are only paid salary to do a certain job. You are supposed to achieve 1 lakh rupees sale in the month, and you will be paid a certain amount, a fixed amount with no incentives. You will be paid only base wage, and that base wage will be 20,000, 25,000, or 30,000, depending upon the size of the company, how big the company is. Then another thing is the commission. Okay, the commission, there are two types of commission. One is the straight commission. Straight, what do you mean by straight commission? Okay, whatever units you are going to sell, you will get a certain percentage of that unit. So initially you are supposed to sell at least 500 units of product, 500 units of that specified product. Say for instance, I am selling audio speakers. So my target is to sell 500 units of the speakers in my primary duty. Then up, then after every unit that I sell, after achieving the 500 target of a month, whatever units I am going to sell into the market, I will be given 50% of that sale as a percentage. So 50% is much bigger percentage, but sometimes organization can pay up to 20, up to 25% on every unit I sell into the market after achieving the target, and that was initial target. So, or sometimes some employees work only on commission. So on every unit you sell, you will get certain percentage as your commission. Then another, okay, the second one, the draw system. Okay, there are certain companies that actually give this option to the employees that they can draw, they can put their name and draw, and if their name comes, they can actually get paid an advance payment for future commissions to the salesperson, depending if you want a loan from the company, so you are actually selling yourself to the company, so company can use you up to a certain period of time. Okay, there is another type that is referred as salary plus commission or bonus. Okay ji, you are actually serving the initial example that I gave you, that you have to sell 500 units, and for that 500 units you will be paid at least 25,000 to 30,000 as your salary, the salary, and plus commission. That means every unit you sell after 500, you will be given a certain percentage as commission or bonus on that every unit sold. This is what it says. The compensation is the part, salary is one part of the salary of the income stability, and the part commission is incentive. So salary, one part of the compensation, the salary for income stability, and another part is the commission for incentive. The commission is referred as incentive here. Okay, there are certain metric. What do you mean by metric? Metric sometimes referred as the measurement or system, how you can ensure that sales effectiveness, how you are going to measure or evaluate the sales effectiveness, how the sales is increasing or not. So there are certain tools to measure the effectiveness of the sales team or sales people. So you are going to see whether our revenues are growing or not. What is the growth in the revenue? What is the margin growth? Okay, per piece, what is the margin? How much we are getting certain margin? Okay, the new customer revenue, are the salespeople, are the salesmen, are the sales managers bringing new customers? So obviously, when the new customers come, they bring revenue. Average sales revenue per salesperson. Okay, what is average sales revenue we are getting from one salesperson? So how many salespeople we are having in one specified city, or in one specified region, or district, or division, or region as a whole? Sales for new products, whether the sales is increasing for new products or not. Okay, if it's increasing, at what pace or at what rate the sales is increasing, whether this rate is satisfying or not. Customer satisfaction. Okay, what is the feedback from the customer? Are the customers satisfied from our services, not from the product, from the services of the sales force? Because when the sales force or salesperson come here, we are actually selling our product not to the retailer, but to the wholesaler or to the retailer directly. Or we are facilitating the products from distribution to the wholesaler and to the retailer. That is where the sales force come into effect. So how satisfied our wholesalers and retailers are, how satisfied they are from our distribution network as well. Account retention. Okay, account retention, what do you mean by account retention here? So one customer that comes, it comes with an account. So for how many days, for how many months that a specific customer come at our distribution and purchases the product. This is referred as what? Account retention. Return on sales. What is the return on sales compensation? Okay, the compensation that we are actually paying to our sales force. What is the return on that compensation? Whatever we are paying to our sales force, what we are actually receiving in return. So there is a percentage defined for every organization. Okay, return on sales investment. What do you mean by sales investment? Sometimes the sales companies actually give gifts to their customers. Sometimes they give you different types of gifts. Sometimes they give you calendars. Sometimes they give you different banners, platforms, different kinds of billboards. Okay, sometimes they give you different cupboards, refrigerators. You might have seen at different restaurants, Pepsi and Coca-Cola refrigerator, the freezers, or showcases, and or the shelves, or you have seen various different marketing billboards outside every hotel or restaurant. So it's a sales investment. So how much you are actually returning from that, receiving in return from that sales investment. The increase in average sale. Okay, whether there is any increase in average sales or not. If yes, so what is the percentage of that increase? Control of sales expenses. Okay, what do you mean by sales expenses? Okay, every salesman, whenever every salesman has the best city. Say for instance, if I'm a salesman, I am based in Sukkur city or in Lakana city. So whenever I go outside Sukkur, I will claim from the company the traveling allowances and daily allowances. Say for instance, I am supposed to go to Lakana for 3 days to work over there in that entire district. I work in Sukkur region. I'm a sales manager or territory manager, and I have to go there. So company has to pay me the traveling allowance or TATA. Say for instance, I'm a territory manager in Nestle. So Nestle actually gave to their territory managers a Wagoner, a car, and they also gave them the fuel expenses. They also gave them car maintenance allowance. They also gave them communication allowance. All these allowances are referred as what? Sales expenses. So you need to ensure that these expenses should not exceed an expectation, does not exceed a limit that is specified. You have to control these expenses. If you don't control these expenses in a limited time, you are going to make losses. You are destined to make losses. Moving forward, effectiveness, how you are going to ensure whether your sales incentive plans are effective or not. So we have certain parameters with which we can ensure it. Frequent changes in sales plans. If your company is frequently changing the sales plan, so you are not going to make that incentive plan effective. It is going to be ineffective. So what this chart is explaining is basically telling you the causes of ineffectiveness of incentive plans. When these inefficiencies or ineffectivenesses are removed from sales incentive plans, they become successful, they become effective. An entitlement culture. What do you mean by entitlement culture? Okay, this person is entitled to receive this much of commission every year. Doesn't make sense. Whether he performs, whether he achieves certain targets or not, he will be paid this much of amount every year. So this is an entitlement culture. So this type of culture is not going to work at all. Pay without performance. If certain employee is not performing and you are paying this employee, then the incentive plans are not working. Sales incentives are useless. Poor quota setting. Okay, the targets that you have actually set for each salesperson are poorly designed. Then you are going to have a problem. Then sales incentive plans doesn't make sense. Small differences in pay for the top performer and bottom performer. There should be a clear, distinct difference between the top performer or star performer and a bottom performer. Moving forward, compensation, executive compensation. Now we are talking about executives. What do you mean by executives? Okay, when we actually talk about executives, we are actually talking about GMs, general managers. We are talking about SGM, senior general managers. We are talking about DMDs, that is deputy managing directors. We are talking about MDs, managing directors. We are talking about board of directors. We are talking about chairman of the board of director. We are talking about MD himself, the managing director or CEO himself. How much they should be paid? What are the various different elements of their compensation? These are the people. Okay, do you know what is the name of this person who was the CEO of the Angro? The person who is actually working in PTI. What is the name of that person? Mr. Umar, I don't remember his name. Okay, there was some person, Angro. He was the CEO of the Angro, at that time, and this person was paid the highest salary ever in Pakistan. He was paid around 60 lakh rupees in Pakistan. Asad Umar. Okay, this person's name is Asad Umar. Okay, he is currently the MNA of the Pakistan Tehreek-e-Insaf. He is your ex-finance minister as well, ex-finance minister of Pakistan. So this person was highestly paid by the Engro, that was 60 lakh rupees in Pakistan, and maybe more. So these people are paid huge amounts as their compensation, apart from their normal other things. So what are the various different elements of their executive compensation? The first part is referred as salary. Then second part is referred as executive benefits. Executive salary or the best salary is different thing, and executive benefits are the different thing. Then comes the executive prerequisites. There are certain perks and privileges. Okay, this executive, what comes under prerequisites? He should be given a car, chauffeur-driven car. He should be given a house, a big, maybe 300 square yard, or maybe more, 500 square yard bungalow. If you are serving in Pakistan to head office in Karachi, then obviously you will be given in defense or in Bahria town. If you are in Islamabad, obviously you are going to serve in the G8, maybe at continental enclaves, parliamentary enclaves. So these are the basic requirements, basic prerequisites. These are referred as perks for the executives. Certain privileges are given. Okay, then comes annual executive incentives and bonuses. If the organization is performing, the organization performing because of his decision making or her decision making. He or she is the managing director. He or she is the CEO of the organization. Therefore, they should be the maximum amount as an incentive or bonus. Okay, the performance incentives, long term and short term, they are given bigger amounts. Therefore, their salaries, because of all these things, their salaries are so much high that you can't even imagine. Inshallah, we will be one day able to receive this much of amount. Okay, this is how the entire package looks like. The executive component, these are the components of executive compensation package. This is a complete package where you can see what are the various components here. The best salary, whatever your best salary would be, the 30 lakh rupees, 40 lakh rupees, and then regular benefits that you are actually given. The regular benefits are your car, your house, okay, maybe other things. Okay, what comes the perks, the other privileges, where you can every year or every month or every semi-annually or quarterly, you can go to America for your personal visit and vacation. You are actually entitled to go with family. You can have all kind of luxuries. Okay, what are the supplemental benefits, any other benefit that actually himself CEO asked for. Then comes the annual benefits and long-term or short-term benefits or incentives and bonuses. All this package becomes around 30 lakhs. Some organizations pay, depends how much big company you are serving in. Moving forward, reasonableness. Should these executives be paid so much high? The question is this, whether we should pay them this much of amount. They don't make any effort. People say, I don't know why these people do by sitting in offices, in luxurious offices. They most of the time come late in the organizations. They come and sit, conduct one or two meetings and all that, and they are destined to go to any other party, go and enjoy the nightlife. They will go to any club and dance with girls, all that thing. So there are certain concerns, there are certain conditions that actually ask for reasonableness. Is there any rationale that executives should be paid this much of amount? There are certain questions that you and I need to answer these questions. would another company hire this person is an executive? What do you think? If whatever amount this person or he or she is asking us, or we are paying him, say for instance, if we are paying a person who is the CEO or managing director around 50 lakh rupees, will other company will be willing to hire him and pay him more or the same? If yes or no. If the answer is yes, that means that that person is a gem. That person is a jewel for your organization. You should retain him or her because it is an asset for the organization. Then second question is, how does the executive compensation compare with that of other executives in the similar companies? Okay, what about other companies? Is it compatible with other companies? Okay, the compensation pay that we are paying to this person is also given this much of amount in other companies as well. Other executives in other companies are paid the similar amount or bigger amount? If yes, then again he should be paid. The answer is yes, you should pay. The third question is, what would an investor pay for the level of performance of the executive? Okay, investors are the actually people, those who are on which money, on which capital this executive is actually making money. If I am an investor, he is actually rolling my money, he is actually multiplying my money, he is actually managing my funds, my capital. So if his decision is helping me multiply my investment, then obviously I am more than willing to pay him whatever he is asking for me. If he is returning me something, then I am more than willing. If he can multiply my capital, if he can multiply my funds into double, I am more than willing to pay him whatever he requires. But it has to be reasonable again. The fourth question is, the executives pay consistent with the pay of other employees within the organization? What do you think? Is it consistent with other board of directors? Are the other board of directors are also paid this much of amount? Are the junior employees, are his immediate subordinates are paid a reasonably differentiated amount as he is paid? If he is managing director MD and I am his GMD, so there has to be a significant difference, but not much. If he is paid 50 lakh rupees, then I should be paid at least 40 or 35 lakh rupees. So the difference should be of 10 lakh rupees or of 15 lakh rupees, but not more than this. If there is a discretion, then you are going to have a difference. Sorry, if there is a difference, then you are going to have a problem. So you get the answer. We say the executives actually handle all the pressure. Okay, whatever. So you can say the executives is the one who actually gambles on your money. So all the pressure that comes from the investor, it is he who has to handle that pressure. So making decisions on behalf of others, especially when it comes to the investment of others, then there comes a very much big responsibility on your shoulders. A bigger pressure is on your shoulders. You have to sustain the company, and you have to make sure that company grow. Company should make profit. Company should make more productive decisions, because it is she on which decisions everything depends. With this, it is me, Masroor Soomro, signing off. We shall be meeting with our next chapter that would be on benefits. So, chapter number 13 talks about the various different types of benefits that the compensation managers has to design. But for now, I say goodbye and I wish you best of luck for your future. And please, please take good care of yourself. in these quarantine days,